Good morning to my stream, the boom session of Friday, the last day of the week. It's Friday, the 9th of August. And comparing to yesterday, we are now back in a more clear environment. When you want to take a look with me at the moment profile, at the situation, the daily profile, the volume profile, in the 15 minutes charts, one can see that with the overnight session we got back into this higher distribution. That means in a higher clearly acceptance area. And right now we see that there is the volume edge around the 34, 35, which found the bias where we're looking now for the range long, because this is one of our hypo range long marks. And then there's also the area around the 31 day May test, and we'll look there if the bias we have seen here in the overnight session in the late evening session, if this accumulation area of other time frame traders still exist. Now this is our long range area, and we want to look now for the responsive buying here to get into a long. And with increasing selling volume into the 30 area, only then we would look for the short. So this is now our activity level where we right now at the moment, and we will wait now for responsive buying or initiative selling below the 30 for our place. Market is back in a more bullish mode. And the pre-market tested several times to find lower areas, but always also find some absorption, and a little bit skewed with the bearish imbalance volume profile is about to be repaired now, and is more a normal distribution. All right. This is our play, initiative selling. What we not want to see would be a quick rejection of buyers now. As we are extended a little bit the area of 30 and having a low volume node at the 31 area, we want to see now the increase of sell volume again and no harsh rejection of the buyers. Because this would then mean that we are not interested in taking out this area and would mean that the buying area where we exactly said that this is the area where we saw the accumulation of buyers, of other time frame buyers, they would then try to keep this area up and stay within the bullish terrain. We already see some small rejection and already seen that they provide liquidity here at the 28. That means after they a little bit tested the lower side, they also they also put some liquidity down here, and we saw some market buying. That means a second leg now here, and re-entering with market buying, with responsive buying would mean we reject this lower area below the 30, below this volume edge, and means that the scenario of bulls staying in control would be alive. We're now seeing the second attempt of the sellers with an increase of sell volume into the area below. And we have to be aware that there is now the situation that they can extend it to the downside. And then our next target area would be around the 18 to 20. If they cannot follow up in selling and met with an aggressive buying rejection, then the probability after taking out the 34 on the upside is quite high and on our advantage that then we will fall back into the pre-market range, only if responsive buying, remember, aggressive and taken out, then a high probability that then we will see the 40 again. If the selling, like you see now and here, continues, we see the higher probability of taking out the low and testing this low volume node and maybe then the 177.18, which is a minor POC. This is our advantage and this is for our risk reward calculation. So right now the bears try to play this level. The bears trying to invest to the short side. You see the skewed profile with this bearish imbalance from the start on. You see this is a bearish imbalance with following value is following the price, and we just have to wait now because shorts are in the books, shorts are ongoing. We see sometimes they take out a little bit of risk, because bears are here, bulls trying to keep this level, also stay in control, but the bears are in the game and trying to get lower and lower. And we see the higher volume edge here at the 22, 23 level. So this is most definitely a target area, and then also the 18. Bulls still protect somehow, a little bit. They still protect the low. You see a lot of shorts are sold into this level here and also now sold into here. And you still, they stay, provide some liquidity, 24. They still block, they still trying to collect pieces. And that's normal because remember what we said. If we can watch a level of interest, of accumulation and bull willpower, then that's normal. That they will trying to keep and stay in control. And that's the area when you see that you're right. It means, yeah, that's the right activity level. Yeah, that's the level where we have some probable good rewards scenarios because there's a lot of interest. And then with a other time frame, you have the body that takes you on your back and can move you to other price areas, price levels. Right now, as I'm in this scenario, my stop is close here above the 31 because I don't want to see that they take out this at the moment level of selling control. So that means if I got stopped out, then I have about 2-3 stops tick from my entry level. As long as we see that delta and everything is on our side and they trying to sell into and sell again, we're still in the game. Now take care. We are now in impulse phase number 2. That means we reached our first target area. This is the higher volume edge from this distribution. I will show you here in the bigger picture. You see this? Prices went to this low volume node, and you know the target 2 is the 18 level. The 177.18, like I said before. You see this here? This is this minor POC. This is our second target, the 18. And that means now we're about to prove, hey, can we re-enter? Can we see if prices here is now not cheap anymore, but fair priced? And if it's fair, we can say that, okay, right now we test the 18 and then we re-enter this value area and find balance within. If they say, no, we don't want to go so short, for me that's already too cheap here, then we will see then a rejection and say, okay, you know what, we don't respect this lower area, but we will instead fill out this lower volume node. That means exactly this area in between the 20-ish and the 28 area. So if you have a second position, as I don't have, because remember I trade this one lot, then you will stay in this trade because C delta is on your side. Internals say, wow, everything is okay. And remember, don't mess up your profit because you know there is a good probability that trader will test this minor POCs. They will test to see if they can find acceptance or a quick rejection at this level. So that means mathematics will work for you if you trade this way and stay with your big picture prepared target. So delta is on your side, still on your side. See this here? Sorry, we go into this pic. See, delta is still on your side. That means as we are now in the phase number 2, in the impulse phase number 2, you can of course move your stop now to your entry level, which will be maybe around 30, 29 was in my case. And this means that's okay if you move your stop here to the 29, 30 around. And you just have with the second position no more risk. The only thing can happen, you don't make any more money with the second. But I don't think that's this is not expensive, or isn't. So stay in the game as long delta is on your side, and we have the higher probability then, or good probability that we will test. Look into this short, very wedge yesterday afternoon value, and it's a good probability that we test the 18. So this is our next target. All right, wonderful. You see, nothing can happen. If you're advanced trader or already a master trader, you will agree that you trust in your system, and mathematics will work against you if you let your emotions take over control. And don't fight your emotions. If you're not so and just beginning or a little bit more advanced trader, see what I mean with this. You see internals on your side, but you maybe recognize some thoughts, emotions, and physical behaviors that in the moment when you're in the trade and you see that the target isn't not taken out or reached immediately and it takes some time and you're not sure, you may then say, okay, better protect this win. Okay, move my stop very close. Okay, I want to secure this. This is on my account. If you see such a behavior, don't fight it. That's okay. Because your survival brain will just protect you of a loss. Okay? Accept this. Because this helps you in the real world, outside. This helps you to stay alive in the jungle, maybe 100,000 years ago. And you have to understand that your survival brain, this cannot make a difference. This doesn't know that this is only the trading and is not a situation of life and death. It cannot make the difference. It doesn't see it. But this is a old behavior pattern. So if you see some kind and recognizing some kind of those special emotions, thoughts, and physical behaviors, like bouncing with the head, looking forward and back, crunching with the teeth, some pressure in your chest, having then emotions like, oh, I'm feeling uncertain, I'm feeling a little bit fear of a loss, and having thoughts like self-talk with yourself, oh, it's not good, I need to take this, or oh, you're always wrong, or somebody looking over your shoulder feeling, what you doing, can't you do it better? This kind of feeling, say, okay, that's interesting, fascinating. There's this old behavior patterns, they trying to save me, taking control. And the only way is, the only instrument to become a master trader in your mindset is not to fight these emotions, feelings, and behaviors. To find acceptance and say, okay, wow, interesting. Okay, there we are. Take a deep breath and say that's okay. And find acceptance. And then, in this case, today, what we see is then the internals, you come back and have a clearer mindset and say, okay, what's really going on? And we see in this moment when it's not was reached immediately, the 18 level where I said this is my target number 2, you see, okay, let's get back to the reality. And what we see is internals, I mean in this case of delta, is on our side. We haven't seen this big rejection like twice. We haven't seen bulls back. We haven't seen delta structure breaks. No, we haven't. And we see technically lower lows, lower highs. The microstructure, highs not taken out. We're seeing ongoing selling. We're seeing ongoing selling pressure. And on the emotional side, it will tell you, but what if it's now going up? Is then this money, is this money then gone that's already on my P&L? Or emotions tell you, this is not looking good. What if it got rejected and get very quick up into my stop? Then I got stopped out. Again, failure. Why can I do it better? Why can I not do it better? Why do I lose money now? Why could I not take the profit here? Then I would have made a profit with two contracts. And normally, you then find yourself in a state of anger and frustration, delivered to this pain and suffer then of a losing trade or whatever. And that's the problem why most of people then fail. They don't understand, and this is totally nature, they don't understand that this fighting your brain will not make you a master trader. And that's the way what I mean. It's about to rethink your trading in terms of your mindset. It's about to find acceptance for old behavioral patterns to then develop new behavioral patterns that serves you better in trading. So this is some kind of painful work sometimes because it doesn't feel comfortable. It doesn't feel comfortable to not let this old behavioral patterns take over. You have to notice there is no way for nobody in the world that this is feeling comfortable at the beginning. That means your trading has a new aspect, is staying in a new light maybe for some weeks and months as it starts to not feeling comfortable. Do not follow these old behaviors that save your lives, that is so intentional, so survival brain indicated. And you have to notice. And this is then the transition you have to make from a underperforming amateur or retail trader to a professional. And if you're starting to accept these facts, you have a significant chance to stay alive in the game and make your account grow. What do we see right now? We see that selling continues, but we already saw signs of absorption. I would say with this second try here at 919, you see that there was already less selling, and again some people trying to absorb. That means they have absorbed into this level. That means exactly at the level at the level 177.15. Please, we do not look for longs here. I just tell you to check and prove your order flow and price action brain. At the 177.15, just objectively, we see people already starting to absorb the shorts. They haven't done so yet because in this price move ongoing, we didn't see so huge absorption. But we're seeing continuous selling in this move ongoing, the same pressure of selling as it was all the move, all the time. But it could not extend the low anymore. That means we see now change in the bias. That means some guy who is big enough, or guys who are big enough to stay in front of the sellers and say, no, this is okay. This is now, for me, a fair price. This is the first time when I start to say, this is okay, this is a fair price. Price advertises lower, and now we are about to find acceptance. This can break anyway, because if the seller is still big enough, they will crash it down. And then we find a next level where we see this kind of behavior. Right now it's open. That means there are both sides looking for acceptance. One side looking for acceptance, the guys who absorb, and the other side may say, okay, I think it's still going downwards. But you see in Delta now, the third attempt on the downside, this here at 922, this led to an extension of one tick to the downside. Okay, that seems like nobody cares, that's right, only one tick, but what's more impressive is as they extended to the 13, we see immediately market buying. That means 89 people only sold into the 13 and then confirming that there is no more selling interest. And now even the sellers, the first short-term sellers, have moved to take their profits. That means they switching from, okay, there's some part of sellers now going to take out their profits here, okay? This means there haven't to be a majority of buyers already, but we see at least as it's not going on, and it's see that the sellers are also reacting at the moment scenario, which shows that there is absorption. That means we are in an open system, reflexive, and they are reacting to this absorption and starting to take profits. This is reflexive behaviors of a market. People react to the reactions of others, and then instead they react to other reactions. And that means this were the signs right now. And I told you here at 919 that with the absorption taking place here, there is at least a small advantage that we see some kind of a reversal. That doesn't mean, as I said this again, that we're looking here for a reversal long. You can, if you have a play with significant edge and have measured it, that's totally super perfect okay. I don't want to stay in front of this theory. I just say that this is not my play, and therefore I have several reasons, which doesn't mean this makes sense to you. Trading plays is a different thing. Trading plays development is about to trade the scenarios that make sense to you. This is the cool thing in trading then, that everybody has some other kind and style of trading, what feels good and right. And as long as you find with your backtesting a significant edge and advantage at the moment, then you can trade this. Absolutely super perfect. All right, then we will make some short break here. So guys, as you can see here, we're now back at this level where the initiative selling started. This was around the 35, starting 35, 34, 33. There was the most of the initiative selling started. So this is some kind of a bearish control level that have to be first traded through before we can say that we are going back into this pre-market distribution, which is obviously around the 35 and going up to the 42. And so right now you see that a little bit less confident trading at this area, as the short-term bias knowing that there will be some resistance. Huh? This is where the initiative selling started. So if you're looking then for a long trend, you want to see first that they re-enter this area of the 34, 35, pulling back maybe a little bit again here to this 31 area and increasing the volume again on the buy side. This would be a good sign to go for the short-term long to the 40. If you're looking more for, again, entering and saying, okay, this is also a range short area, then you're right. Around the 33, if you see ongoing responsive selling, then this will be the possible range short. But be careful, because as they're starting to find some acceptance and building some edge, some volume edge here, we only have this target area up down to the 28 and 27. So that means if you got into a trade at 30, 31, this is the minimum of 1-to-1 risk reward. That means you should have been already in this trade or looking here for a cheap entry at the 31, 32 area to get to the target 28, 27. This is what we see right now. So I would not be too overconfident with a short-term scalp to see my target here at the 23, but more theme maybe then at the 27. And why? Yeah, because the overall rejection, if you look here at the 15 minutes picture here, you see that we got back quite fast within 15-20 minutes from the low to this area right now at the 32. That means if we can find some acceptance when we're going back to the target area 27, 26 now, that would be already mean that we see some kind of excess. That means some strong low. So that means that the bias is then not so on your side anymore. And remember, when we stay here and find acceptance confirmed by the time, and now also measuring by volume, finding more bias, then we have more a skewed profile to the upside. That means the distribution built today now would be more in a bullish imbalance. That would mean that we have a higher probability testing up this area again at the 40, 41 area. Okay, as you can see, it was like I saw the advantage or the edge here with the short only with this short-term volume edge at the 27, 28 area. And you see that price with the first attempt also only made this 28. So please be careful. You don't watch me because I make forecasts where the price is going to. This is bullshit. No one can do this. But I just tell you what's the advantage or what's the edge right now. And I said, for me, this wasn't a lucrative short trade. Even so, we saw here the signs in delta of responsive selling means one time double, two times double rejection. If you got in at 32, I said it's just no good risk reward, because if when your target is only here to 28 at the moment POC, then I will say, okay, this is a only 3 to 4 ticks chance. Because I said we can see already here some acceptance and people finding value, and you see then this is just from the profile, it's just a more bearish, a bullish imbalance. You see this here? We see this is the one side, and we see it's skewed. That means the value is more up here. That means on the other side, if you draw it the same thing on the upside, then we would have a pending profit target, and this would be around the 46 then. So that means this would also be matching with the higher volume edge of the pre-market. So this is then the scenario. This doesn't mean that price is now going here and then straight to this. They can come back. We're first starting to fill out. We will get into imbalance again. Everything is possible. But right now, only for the moment, if you're thinking of a trade and you're seeing that we build value here and see more volume, people feel comfortable, and we see then this rises and rises, that means we have a POC here, lower area here, and we see then here a unfinished distribution, which in this kind of skewed profile means this is then the definition of a bullish imbalance. And only for statistical, then we have here some target area around 70% up to the POC, that means the 40, and then even up to the 40, 42, 46 area is possible. I would go for the long. If we see that attempt on the upside finally means that we do leave this sell control level of 34, 35, I told you before, we want to see that they will not continue to stay in control, the bears. We want to see them in control. No, we don't want. We see that the bulls coming back, looking to find acceptance within this pre-market distribution. That means finally, no matter what, how bullish this could be looking, and then a bullish imbalance is no worth for me as trader. I want to see that they really then take it out and make it back into this distribution. So back into the 35 area with some volume, maybe some pullback again to this area, and then increase of volume. And when it's increasing volume, you can think of getting into the long, your stop below this area of former initiative selling around here, and then you have a advantage on your side. Target 1 would be then the level 40, and target 2 would be the level here around the 44, which would be the pending a profile target. But be patient and wait for the signs and the trigger, and the bias must be on your side. If not, no trade. Look at the footprint also. You now see in this first try of people and pushing back into this value, almost reached even the POC. So now the only price that would make sense and would be cheap enough would be around the 35. I would not go into it at this high levels, because POC is already here from the pre-market, and this would be the risk and reward wouldn't be good. So don't let yourself fool from price, and if you're not in a trade, so what? Then you're not in, but you're not taking bad risk reward trades. This would be absolutely loser criteria. All right, target already reached. Target 1 reached at the 40. There was no coming in with my play. You can have your own play. I know a guy who traded it the way that he's waiting for the break in the delta structure. That means at this moment here, see this small, oh, wrong window. You see this small candle here, sorry, this small bar here. You see then also in the delta structure is about to break. You want to know more? Okay, I'll show you. Look at this here. You see, I will call this a delta structure at the moment. Right? And at this moment here, at this moment in the bar chart, in the chart, and at this moment in the bar chart, candle chart of the delta, we see delta is about to break. You can try then to get in before the actual break takes place. Okay? That means when you see the initiative buying starts, boom, you get in as quick as possible, market. Then you may gotten in at 34, 35. All right? Because now you know the first people about to still buying at the top of this balanced structure. And remember yesterday what I said when I repeated this quote of Mr. Jim Dalton, who says, from the old time fashion saying, he says, market theory, market profile, market and price. So he said, price advertises for all directions. It advertises for the long and for the short side. Then time measures and brings some kind of confirmation into this game. And third, volume measures the success or failure. And remembering, calling this a finding value. Seeing that then the short of the range not going low to this area or this, but to this where I said this is more probable now, 28, got rejected and find increasing buying volume at the top of this small wedge area. That means price advertises this high area. Time regulates because we see some structure for some time. We see then the rejection technically, and 3, volume measures the failure or success. Then we see volume will tell us that after only taking time with regulated time in this area, going back to this top area of this balanced level, seeing a measurement of volume that is about to break the delta structure, that means people still buying at the top of this consolidation. This is your trigger then, and if you have not the trigger like I have with the pullback and going in, because I'm just a more conservative player of this game, that doesn't mean that this makes you more successful or more loser or going with the more aggressive. It depends on your personality or your character. So anyway, you see the measurement, volume tells you, okay, so what? There are people still buying at the top. Then you can take this as an edge and see also that the overall bias is on your side, because we see this skewed profile with a bullish imbalance, with a very quick rejection, like a V-shape reversal, and having the probability now to get in here at this level 35 and know, okay, my first target around is here to 40, and my second target with the pending profile target would be then around the 44, 45 area. This is just auction theory. And you can check this on your own at every damn market. Every fucking market you can test this. Of course, if you're trading illiquid markets, if you're trading the DAX, okay? You have to be aware, or you have to come clear with this fact that this market, the Bund, is very stable. You see no overshooting, and it's very stable, clear structure. If you're trading the monkey market DAX, which can make you rich also, but it's not that easy, because it has more volatility, because it's illiquid, not a liquid, but illiquid market, you have to accept. And I will draw you what in the DAX it would look like. All right? In the DAX, what it would look like, this kind of move we've seen today in the Bund would be in the DAX maybe like this. Boom, 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 boom. So that means you have a lot of more overshooting and have to accept this taking place. You have to be very aware of your emotions and we have a supreme trading mindset to still stay in control while the market overshoots like hell. This is the problem when it's an illiquid market. The positive thing of a more illiquid market, so not liquid like Euro stocks or S&P 500 or the Bund, is the good thing in the DAX is then that you have more, of course, in a shorter time frame, you can make more points and more ticks. That's right. That's why a lot of people trading this market. So I have to be aware of this. It's just a lot of overshooting, and that makes most of the people I know, and I knew a lot of people who wanted to become professional traders from retail level to professional, maybe 100 or more people, and most of them failed just in trading this market. I mean, that's a fact. And that's, of course, it's more complicated to see that it's boom, overshoots, first try, boom, no, didn't work out, boom, again. So you have to be very aware of this overshooting and don't measure it as immediately failure of a move because it just don't takes place the first time. It's really harder. So that's why I trade the more liquid markets, because they just don't fuck up my brain, and I don't know why I should waste some cognitive resources in my brain for some damn stupid overshooting all the time that just don't fit to my character. And I know, okay, there are a few people where this kind of market behavior fits perfectly to them. And then it's good, they do trade then the DAX. This is very good. But you have to understand, makes no sense if you force, I want to trade the DAX. So if you're still in the DAX and don't making money and doing this for years, you may think of maybe it's also maybe the market, it's not perfect for me. Yeah. Or maybe it works for you very good, and then you have to work on your mindset. Anyway, now we're building auction theory. Look at this again. Balanced situation here. Value has not shifted yet. POC still is here. That means, okay, we have some energy. We put some energy into this. We reached already the pre-market VPOC, and now it's about to see. Can we see in the measure of the volume if this, and we will take a look together at this situation. Can we see now, when we arrive at the low of this microstructure, can we spot responsive buying again? And this would obviously measure that we're staying in this profile, staying in this balanced area. And can we then see at the top area, not only responsive selling, but then also initiative buying, and then volume would measure, okay, and now the next level would be the high probability that we even see the 43, 44 area. And remember, at this time when we were here, I said, of course, this is then the pending profile target, because this is our skewish profile at this moment with the bullish imbalance. We look at this here, and then we draw this on the other side. Okay, it's looking so awful. My drawing is not looking very good, but you understand. This is then the other side. So pending bull target would be around somewhere this area, 46. And right now they make it in stair steps. Market will not make it at the first time. It sometimes takes some time. It can fall back to this. We see in excess. And then we make the next stair. We may fall back again. Again. And then we finally make this area. And that's just how it could look like with the auction theory. Okay, seeing now we are still in the game, but couldn't get to the high again and failed, and see selling already here. So right now at this moment, it takes just some time. It's already 10 o'clock, so it's just short-term trading right now. Nothing to do for me. So guys, do you see this here? Not for you trading right now, that is not more important for the situation, but I just want to show you, if you're looking at the delta, you see this is textbook absorption. We see that the price all the time starting from here, see in delta, there was more selling in this scenario. We see this overall balanced area, and you see at this area starting from here to here first. Don't look at this. We only look to this here. So we're starting from here to here. Selling. But the low could not really extend it. We saw textbook absorption. You agree? People selling, but price don't go lower. So that means sell control here, short move, signs of reversal. Played even the first time. Kind of V-shaped transition, V-shaped reversal. Building value, cannot reverse the range short, which I said I don't take it because we see more now becoming a bullish imbalance. Now, resistance. Resistance became support. That means the bias now in this area has moved from short to bullish bias. Everything has started with this V-shaped reversal, and then with this first signs of acceptance, and then even more on our side with this rejection only making the range low to this. Then with the next sign is measuring, breaking the delta structure, measuring volume for the success of a maybe extension and going back to the POC, which took place here. And now they at least trying to hold. That means, that doesn't mean that price will stay here and go immediately to our pending target area. That's not what I want to tell you, but I want to tell you that most of the times, 1, 2, 3, 4, out of 5 times you would have made money when thinking in the auction theory, watching the volume profile as a measurement tool, taking control and look at the price action, seeing and measuring with the micro level also volume and auction theory, and watching how the reaction was and seeing how delta has impact or not on price, means having a convergence or a divergence. And I think this is very important. Market now has a clear skewed profile to the downside, upside, how, and seeing that there is some clear bullish imbalance. But prices will not make it the first time. They still seeing some selling, still seeing the people trying to stay in control, and bulls tried even harder. Looking at this moment here, seeing at this moment we had some people only less playing the long. They were enough to keep up prices 1, 2, 3, 4, 5 ticks, could not take out the high, but moved price higher. And at this very moment, when you look closer, you see here the liquidity passive was provided in the bid to take over control of their buying. And then at the same time, when they sold, even after they move up with market buying, you see they sold like hell back, but price could not move back but only 1 or 2 ticks. But look at this, how impressive they sold into this level at 10.08, 30, 10.08, 10.9, and even 10.9.30 with 1.5 minutes. But they absorbed like hell because they were confident and say, hey, resistance became support. We want to stay in the game. And okay, I see people selling, but I want to stay here. Because why? Because they are just, the short-term trader were confident. They also see this bullish imbalance. Okay, the other time frame traders, the longer, said, okay, now we cross this again. I'm back in my control. We reached our first target. We staying balanced. And for some reason, whatever this reason may be, there's also still sellers in the books. It can be people reacting to the market, to the environment, to the economy. It can be some funds, investment funds that working out some order. It can be some guy who's still thinking of, okay, this is still a very, very good cheap entry for the short. But you see again that this is the area of significance, that this is the area where the action takes place. And this is important to wait then for this areas to be arrived. For me, there's no trade because I said I want to get into this trade with a short pullback. That didn't happen here, but they instead reached the target area. That means the pre-market POC, which was obviously at the 40, and then they reached it 1.5 minutes later. That means my trade was already gone, and I had no opportunity anymore. Then I said I don't want to trade this very wedge console at this time of the day, because you see there's not enough power to make it more than this 1, 3, 4 ticks. And the next target either way would be only this higher edge at the 44, and the best risk rewards would be the pending target of the bulls of this pending profile target at the 48. But this is not let's call it with a high probability, because it's always more probable to go first with the edges or the POCs as targets. So this is then the POC 40 that was already reached, and the next target 43. I think you will agree that 43, only 3 ticks higher, this is not worse than to play it. But you see, they stay in control. Another absorption phase in between 10.12 and 10.14. Check your delta. See this? The delta is still making a low, but price at this moment, from there on, as they achieved new lows, they stayed at least at the 32 level. That means this is the last area where they can find the acceptance of some bulls. And if they can take out now the 32 area, then there are more probable that we going back in selling and seeing at least testing the VWAP area and this volume edge at the 27. But bulls don't want to clown around. They're trying to stay in control with this huge absorption momentum, and trying then, if they can show everybody here, hey, short sellers could not make it an extension to the downside, then there is then a high probability that we see at least taken out and going to this volume edge at the 43, 44 level. If not, bulls lose, then it's not a good chance for a short trade, as there's already this volume edge at the 27, 28 area. So this is no good risk reward. And for me, I would say, as you see this, always 2 big intraday moves in the market appearing every day. This is where my trades taking place. That's where I took my trades today. So I seeing a high probability, as long as I don't see some supreme setup anymore, I see a high probability, I would say 80-90%, that that's it for the week for me. That I made my trade, and I'm not gonna force anything here, as usual. And here you can see how good it is to have a big picture preparation that gives you the confidence and about your strategy and 177, 18 and 12. And you see sometimes how distribution here. And you see how important then this is to have this this bias and this big picture preparation to know where to measure the risk and reward. Because I always try to, with my preparation, take in the reward and the chance, therefore from the big picture and on the micro level, take in the risk from the micro level. So you have low risk and big reward. And that's very important. And if you're following us for a few weeks or months now, you can see every day when I refer to my morning hypos and big picture preparation, I would say 90-95% if the market action taking place in the area where I have prepared, of course, then you see 90-95% that one of my hypos is a good orientation and is a good mark where you can see it's always the areas where they're tested. And I'm not a magician. I'm just taking I'm just have checked the Bund market and have make analysis and of course knowing with auction theory and volume profile and took my targets from this knowledge. I mean that's not so complicated. If you do this for let's say 4 to 6 weeks or 2 months, you can become quite good in this too. So yeah, it's not so super hard to develop this and find out where the market participant reacts. And most of the time, in other markets as well, it's either the volume edges, the high volume edges, or the minor peers on bigger and main VPOCs, also VPOCs and volume edges. And you then just have to bring that in context with the movements and absorption and everything else from auction, market profile, and volume profile. That's why it works, because what should they do? The big time frame, the other time frame and short time frame traders, they do nothing else. They also test the old levels because they want to see if there's something to play, if they can be a majority, if they can trap some people, if there is a balance there, if we then set more our algos alive and make algo trading and what else? They need something to refer. So this is the difference. That doesn't mean that this is a magnet level where they're going to go to and we make a forecast where price is going to. No, we just want to see how behavior is at this edges, at this VPOCs, and then we make a decision based on volume profile, market profile, and auction theory, and know where the targets are, higher probability that they will be played because they want to test and want to see after prices advertises if we find a new area or a old area of acceptance again. And that's it. And if you don't believe me, just check yourself. Spend some time for the weekend, and on Monday write me a message and tell me what you found. And you will find the same thing in every damn market. That's it. Alright, as you can see, we stay in control. We a little bit filled out this area and now finding balance overall in this area. It's a little bit divided here between the 35, 34, so that means the sellers could not take over. Even they tried so hard. See this, how hard they tried. Now we're back in more buying. That means tape is more greenish now and people still buying. But on the other side, the sellers are not letting them go over the 37. You see, they're still fighting. This is so important. It seems to be, this is just objectively an important level. We can't deny. That means now the people on the sell side, they stayed in control and did not let them go above the PUC. You see this? Buying. So the same game like here, but now in the other direction. That means the 37, 36 area, this is some kind of pivot. And this pivot, the action took place. And as long both sides are ready and don't want to stop to defend those sides, there's just bull-bears fight. Now a little bit taken out some longs, some risk off the books, as they see we could not extend it anymore. And now the probability, as we see, is very high that we test
this level here where the long started again when I said before at the 27.28. This is this volume edge. You remember I said this already here, that this is now probable. If they can stay in control, then it's a high probability we see running through this whole area of 2 days distribution from the build from the time from 99 o'clock 20 on, and this is what's happening right now. 27, and then there's some separation, some lower volume node at the 25 area. So here's the edge and the high probability 27, 28 that we see this. And I told you I'm not going to go for this trade at this moment because risk reward is not good enough. And I also can tell you now that now I'm 99% sure I'm not going to take on a trade anymore today because time's running out. We're getting closer to the noon hours, especially the time beginning from 11 o'clock. I see no news on my monitor. I don't see anything interesting. Let me check it. What we have, okay, this is the oil production OECD report. There's only, I think, at the afternoon, 2:30, I think, the next interesting numbers. Yes, 2:30, we will have the employment change, unemployment rate, and then especially the core PPI in the US. This is important. This is important number then at 2:30 that will give new flowing volume into the markets. And before I will not trade, so that's it for me for this week. I made some good development, some good progress with my behavior change. That means I'm more in a steady mood, in a good mood for acceptance. My behavior is better and better. I still having some weaknesses where I need to work on, but I work on with acceptance. So that's the nice thing. It's not about discipline but it's about just acceptance. And I see that the progress that I make while working with this program I'm in, with psychological skills and training, that I'm more and more feels better and better. It's small, little, tiny steps, I have to admit. And that's okay. But it's taken place. And the next step is then to even increase the new behavioral patterns that serves me better. Right now I'm still in some kind of acceptance moods. And also, yeah, some things even is working out quite good at the moment, I have to say. And yeah, I'm happy about this. That's just to keep it up, and I wish you the best as well. And you see, market theory is playing out again as we check this area. When I said this is the next target area, you see quite immediately what I said before. People react, of course, to the volume edges and the POCs and the VPOCs, and now they play it again with some rejection into the long. So this is now something beautiful for your target trading 47 area. Why? Because this is some kind of excess now on the downside. That's very nice. So that means when coming back to this area and we see that they stay in control, took on at VWAP, took on clustered with this volume edge and staying in control. And now remember my words, measuring the success with volume. Then when we see going back to this up area and you see that the delta structure keeps on rising and breaking here, when we go back here, if we make it, if not, okay, no matter, then maybe some short, but if, then you have a wonderful advantage because we saw some small edge, some excess on the downside. And if this scenario works out like this, at this moment here, and breaking and high volume increase, then you have a wonderful probability for reaching this pending profile target at the 47.49. So that's what you just have to watch. What happens in between doesn't matter. This was just a good sign. And if it's not working out, because you see they want to sell again and again and again, then no matter what, then what? Then you just haven't had a play. That's okay also, because we don't know what happened next in the market, and we don't need to know what happened next in the market in order to make money. That's very important. So we'll stay live for the next still 30 minutes. If something interesting happens, I will tell. And right now make some short break and get me some glass of water. And if you have any questions, like always, feel free to ask me. I mean, I give you the chance to look in my brain and my trading now every day, and we're still doing it for free. I mean, tell me who damn trader is showing that his weaknesses and also his strength, and can reasonable tell you what's going on and tell you how to measure and think, or give you some edge or some strategy, how to develop your skills. Tell me, who's giving you that for free? I think nobody. I don't want to clap on my own shoulder and say, wow, you're so cool, but I think it's important to confront all these entertainment guys on YouTube who tell you where prices go and how it easiest to make money. I would say my success would be if people turning away from trading because seeing this how it works. This would be a success for me, that people don't trade anymore. This would be crazy and good for me, and I would love this, because then I avoided a lot of pain for those people, their families and their lives. And if there, on the other side, maybe one or two traders who see, okay, I'm quite good, or am I even better, or I'm on the right way because I see Anton, how he's doing it, and then I reached my goal also, because then maybe one or two guys, women or men, can achieve their goals and become a really sustainable, confident and profitable, consistent, profitable trader. And that's the other thing. Both is okay, and be sure one day we will not do this for free anymore, because if somebody is really interested and I'm giving away my cognitive resources for this, then of course this will then not be for free one day anymore. I think this is totally clear, and why should I do this for free when I get some money for it, to know that people are really ready, and I'm not gonna waste my time for people who just wanna get some extra informations. I don't want to waste my time for those people. I'm happy to give some time for people who are having a serious goal and knowing their talent. I'm totally happy, and I don't want to help people who are wasting their time, by the way, and my time as well. So because this is also my lifetime, I also have my family and my life, and so this is just cognitive resources and everyday preparation, charting, showing, talking, trading, measuring my own stuff, my own development. So one day I can tell you it will not be for free, of course, anymore, but right now I'm still able to do it and to show it, and I hope you like it at least. I even also just measured. I took a place at my metrics calculation and saw so far when I started this new measurement of my behavior and trades, lucrative and lousy. I see now, right now, I'm on track, but not have reached my goal yet. So that means for 2 weeks now, I'm having a rate of lucrative trades of 67%. That means still 33% of my trades in this time period were lousy. And you know what I told you yesterday, goal is, and it's absolutely realistic, because if you need get your mindset under control and changing to new behavioral patterns that serves you better while trading, it's realistic to have 90% or more. So target is 90% lucrative trades, and now right now I'm at 67%. So that's okay. I'm on my way, and also my routine in the morning gets better and better. That means in the second week, this week, I already had 2 out of 4 days where I have complete my routine, which is 6. That is 6 things I need to do to call it a ground basis for trading lucrative with a good mindset. So this is also good. When I took a look at the last week, I only had 1 day where I completed completely all my daily routine. I see also a rise in my behavior of my physical sensations, emotions, and thoughts. So this is obviously a little bit harder part that takes a lot more time. And something I started to measure this week, was really nice, is that on all the days where I have my I have some small goals, so step by step, very small successful steps to mastery, and this I reached fully the last 3 days when I started. So only 3 days. So this is no data for evaluation, because it's not enough data. But I see that working with small targets combined with routine and working on my old behavioral, I see also the impact in my trading then, in my numbers. And that's important, because that's then the truth. You see then that is really having, if you trust in yourself and go in this process, then you see an impact in your trading. And talking of this week, for example, then one can see that the lucrative trade doesn't not only make more money, but the lousy trades were not that heavy, and that's also very good. That means you see already some changing, and it's said to be, for me, my goal is for 6 to 8 weeks. So I mean 2 months to stay with this exact process and give me the time at least for 6 to 8 weeks to see some continuation of the numbers, and staying then in a level I knew it's then the next step. It's even harder then to get bigger with your position, but that's then the next step. I will go on with the system for 2 more weeks. That means then I have a 4 weeks measurement, and I'll measure this 4 weeks then my numbers, and I have a look then if I'm at least at 80-90% of lucrative trades. What I will do then is I need to have my account needs to rise even bigger. If it's not rising bigger, my account, and just staying, let's say, with only a 5% or 2 to 5% per week, then I need to make, after 4 weeks I measure, then I need change to my place, because then the place wouldn't good enough, because having 90% lucrative trades and still only making, let's say, I would not be satisfied with 5 to 10 ticks profit per week. So that would mean with one contract 50 to 100 euros. Of course, when you trade it then later with 5, 10 or 15 contracts, everything is okay. But this wouldn't be enough for my strategy, at least. So we will see how it works out. I'm curious, and will be interesting. And we will see if then the lucrative trades showing clearly they will show then if my plays are good enough. And right now it looks at least very good. It looks very good, and it's all about to decrease your lousy trades and work on your mindset. So yeah, it also feels good for me to see that development. So see in delta that the buying is still in control. Do you agree? You see this? All the time buying is in control, a little bit stagnation here, but then again coming to the low, wanna stay in control, wanna respect this edge, wanna respect the 2 days value low, value high, don't wanna give up this area where initiative selling starts, where buyers showed, hey, I wanna be back in the game, and even they shifted a little bit downside, as May looking, isn't this the bears now back in control? No, they just shifted a few ticks downside. You may have lost a trade when you started here for the long. You may have lost this trade, but who the fuck cares? You have to see and stay clear and in mind and have to see it's still not over. The fight of bulls and bears are not over, because bulls are in control, sellers are defending, absorbing at the upside, but buyers don't give up. People buy and buy and buy, some break, and buy and buy and buy. Absorption and liquidity provided. Look in the footprint. I want to be in this trade. I'm providing liquidity, 500 contracts. I provide still liquidity, 500 more at 29. I defend this level. I'm accepting. So it's now 10:50. What you expect, the moves are not that huge anymore. And as long as buyers can defend this at the moment volume, edge and this area, then nothing will happen. Nothing. Giving up some positions, hitting liquidity area, and remember, here's our volume edge. Here's our 70% of the day at the moment. And as long as they're staying and absorbing or taking over and still buying, everything is under the control of the buyer. So then, as long as this taking place, and if we get, remember, back to this area here, at the top area from this volume edge, and we see initiative buying, then we have a high probability reaching our pending target area 47, 48, 49. And if they cannot stay in control, then you have to think, okay, if you want to go then and they break it and go to the short, you have to tell me first, when you take the short, what is on your side now? Because if it's not a long trade, that doesn't mean that you have to go for the other side. You have to be aware first and tell me where's the target. How you measure risk and reward. So tell me now, where's the target when you go now, as you see that they couldn't hold on to this level, the buyers, now more selling. We see some pullback. Just think of it, play it. Just think of it, you go now into this trade with the short here. Where's your target? And where is your stop? Tell me, where would it be? So this is the question. And if you have an answer and say you can reasonably tell me with a measurable strategy and statistical edge, then go for it. But you have to be sure that this is something worth to do. And for me, I can tell you, this would not be a short trade for me. Even though it works out now, we don't know yet, even though this short would work out and we going back to the low, this would be not a short trade for me. Why? Because bulls stayed in control so long. Number two, we have this skewed volume profile, means we're seeing a bullish imbalance. Number three is even more important. We're at 11 o'clock, where I don't assume, if you check the Bund charts of the last month and years, you will see at this time frame there's a lower probability that we see a good distance in moves and a good rotation, more than 3 or 4 ticks. Okay, you will find maybe 10 or 20% where it moves 10 or 20 ticks, and you can say, hey, I could have made 10 or 20 ticks. Maybe. But in the majority of all cases, you won't. And if you want to become a good trader, you're not gonna give these emotions the control over your trading. And so I'm not gonna go for a short here. And that's the thing. overall, this is a distribution and this is a blurred profile. It will maybe be filled out first before we seeing the upside, but the more probable now in the bias is not for the short. It's just not. Excess on the downside. We shaped transition reversal. Next target already the minor POC at 23. Before it can enter lower prices, it needs to see if there is not a rejection at the 23, where you see at the profile here there is some value where we could go in and back. But I wouldn't go there. And that's reasonable, isn't it? I told you some reasons. If you have reasons for the other side, tell me. And then it's okay, then trade it. Trade it. So you can see how chewy and gritty this short was running. Very, very, very stringy, very tough, very chewy. You see, this is not how a short should look like. I'm very happy that I did not take on the short, because now I would have been 1, 2, 3, 4, 5 minutes into this position, about maybe to stop out right now. And this is why should I the damn trade against the buyers here, that I see still people are trying to hold this area, drill buying, and it's this time. So this you will agree that's no fun. So I will recommend to everybody, don't trade at this time and against the buyers of the market. And no matter how this will end, I will say thank you again for watching, for listening. If you have any questions, don't hesitate to write me a direct message here at the Discord, our Discord room, private message, or at the public chat, and I'm happy to give you an answer. And happy training and learning. Maybe this weekend also take some time for you and your friends, families. And yeah, we will see then what next week will bring us. See you then on Monday. My recap later. And thank you again. This is Anton Hopfel for Manapa Trading. Bye bye.